All right, everybody. A very good morning to all of you. It is currently 10:56 a.m. and as you know, 21st of March. It is. So first of all, apologies that I couldn't consistently putting these videos on my YouTube channel, but life keeping me busy on the other end. Anyways, let's just not waste much of our time on saying that we don't have much of time to to do these videos. Let's just quickly jump into the week ahead, starting with the this week. Starting with this week, I think this is the current this week. Yep. So we had couple of rate decisions coming out from Bank of Japan, from FOMC. There was Swiss National Bank, and the lastly it was a BOE. So when I started this week, I thought it's gonna be a very exciting one, but turned out that we didn't get much of from this week. We had couple of, as I said, central bank rate decisions. Alongside with that, we had some of the major releases coming out from the major G7 economies. But turned out that the macro events also didn't give us much to work with. Uh, so let's just start with the first FOMC or the other central bank rate seasons. I think on Tuesday, as it is showing on this calendar, we had the Bank of Japan coming out and giving us their thoughts on where they want the policy rate to be. 0.5% is what they kept. Consensus was 0.5%. So it was widely expected that how they're gonna go with their policy rate decisions. If I just show you over here on my Excel sheet right here, uh, the key things we had from the bank was just these two things I highlighted here. First was that it wasn't much. So the first thing was bank refrained from providing any major clues on policy, and it noted that Japan's economy is recovering moderately. And the last thing was that I think the most or the majority of the central banks are focusing right now is that they are acknowledging that the risks include the trade policy of each country and it impacts our overseas economies and prices are likely uncertain. So with that, this Bank of Japan policy rate decision was, let's just say, was a nothing burger. Uh, they do provided uh, some thoughts on their economy, some thoughts on their rate effects, their yield curve, and their wages, and so on. But let's just not waste our time on these things. And the overall picture was that they didn't provide any clue where what their next policy rate decision gonna be. If they're gonna increase or decrease. It's just this a matter of time. So with that, the first central bank decision, it went just like usual, a nothing burger. Now let's focus to the next one. The next one we had on March 19th, it was FOMC rate season, and you can notice that alongside Fed fund rates, we had FOMC economic projections. So what are those? These economic projections include inflation and economic growth over the next 2 years, and more importantly, a breakdown of individual FOMC members' interest rate forecast. Source first released on April 2011. So I think you had the picture, but I will show you that what exactly the FOMC projections looks like. Might of you already know, might of you might be new here. So let's just have a look. Let me just open up my Excel sheet again. Where is the Fed? Right here. So this is what our economic projection look like. Okay, and we will touch on this later. But let's just start with the rate they gave it up to the market. The Federal Reserve leaves rate unchanged, 4.425%. It was as expected. So in the statement, They said unemployment rate has stabilized at a low level in recent months. Labor market conditions remain solid. Inflation remains somewhat elevated. So this is well known. Okay, we already know that unemployment rate, the U.S. economy is doing not that bad. Unemployment rate is stable. Labor market conditions are solid, and the inflation is somewhat up, but not that much. Uh, with the economic projections we had uh, for federal fund rates (FFR) 2025, 2026, 2027 remained unchanged with the longer run. So these numbers are right here. So in the December projection, they went really hawkish. I mean, the last meeting with the projections that happened on December was really hawkish. But this time with the projections, they just stayed neutral. They did not change anything in their projections. You can see that December and current 3.9, 3.9, 3.4, 3.4, 2026, 2027, same, and so on. If you look at the GDP, GDP is somewhat, they kept it the same, but mildly changed. 2025, they said it's gonna be lower from 2.1 to 2.7 to 2026. They decreased from 2.0 to 1.8. They dropped again for 2027, but it wasn't that significant. Market was really worried that the US economy might crash in upcoming years, as the Atlantic Fed GDP now tracking showing that the next coming quarters the US economy might end up being in a negative territory. So but the Fed here tried to calm the market that, hey, we don't have to worry much about the growth, because we are confident that in the upcoming years, or let's just say for this year, we think that the economy will grow by 1.7%. So this was pretty a positive outcome they gave it to the market. But for the other things, like for the federal fund rates, for unemployment rate, for their inflation forecast, they didn't change much. So overall, it was also a nothing burger. Okay, but we just had some positivity coming out just out from the GDP side. Other than that, it was just one of the usual meetings. They come out and say that okay, we're gonna keep the rates same, and we're just gonna wait and see how the things goes before making any changes. So that was the FOMC. And now let's look at the Swiss national policy rate decision we had next day, 20th of March. Widely expected, as you can see here, forecast was 0.25%, and the previous rate was 0.5%. They did cut their interest rate by 0.25%, reaching their level for terminal rate from 0.5 to 0.25%. But if we look at their statement right here, let me just show you. So, in their statement, it was clearly stated that the SNB also remaining willing to be active in the foreign exchange market as necessary. This is a really kind of red flag for investors, for retail traders out there trading Swiss National Bank, because we don't know that if the central bank sees that their sorry about that. If they see that the Swiss franc currency getting depreciated, they're gonna intervene. If they see that it's getting too strong, they're gonna intervene. So we don't know. So patience is the key here. We do have had the projections coming out from just like FOMC, the Swiss National Bank also give us their projections quarterly, once a quarter. So in this projection, they didn't change much that where they think the policy is gonna be at the end of 2025, 2026, and 2027. As you can see that in the last December 2024, they said in quarter one, 0.3. For March this year 2025, they projected 0.4, and it goes just by 0.1% change for 2025, and for longer run it just stays the same with very minor changes in it. So overall, we haven't had much to play with this Swiss National Bank rate season. We do got the projections from Swiss National Bank, but we didn't get much of the information that we want as a trader, that was going to happen in the future, or let's just say from a policy point of view. So that was also came out to be a nothing burger. Now let's move to our next policy rate decision. Came out from Great Britain. It was BOE. So let's start with official rate. They kept it the same, widely expected. But the difference from having a rate decision from BOE and from other central banks, uh, from Swiss National Bank, from FOMC, BOJ, it can be any bank. The difference or the unique thing this bank gets is that they show us these numbers. What are these numbers? These are the each individual member sitting in the MPC committee voting for cut, no cut, or a hike. So let's just go first in the definition of what these numbers are. So the format you're looking here, the first number 0, stating that how many MPC members voted to increase interest rates. So 0 means none of the MPC member voted to hike the interest rate. The second one shows that how many to decrease rates. There is only one. Okay, the market was expecting it's gonna be 2, but there was only one member. I think it was a man, MPC member, who voted for a cut. The last is for hold. How many expected? How many would the MPC members voted for to hold the race? It was 8. So that was a little hawkish numbers we got here, but the official rate stayed as expected. The monetary policy summary, what we got. Let's just have a look on my Excel sheet right here. Let me just open up for you guys. BOE right here. So so this is somewhat we got from statement. It was really messy, so I don't want to go all over what they said. Just highlight the thing. As I said, in the most of the central bank rates, the MPC, or let's say FOMC statements, BOG statements. One thing they are right now worried is about the global economics. We know that with the Trump policies, tariffs, uncertainties, geopolitical tensions really playing a key part right now in the investor's mind. So, with that, this bank also stating that we'll look very closely at how UK and global economies are evolving. So overall, the statement was pretty much nothing burger. As I mentioned here, marginally hawkish on the vote split, 8-1, but nothing in this screams higher for sterling. So that was the last policy decision we had for this week, and turned out that all of the 4 major central banks gave us nothing to work with. Even it can, you name it, like it was BOJ nothing, it was FOMC nothing, it was SNB nothing, and it was BOE nothing. So that was a week, and now let's just look at the numbers. What we got numbers from the economy, starting with the US economy. On Monday, core retail sales came in pretty much negative, but it didn't change the broad picture of the US economy, because we know that the retail market is a very big market in the in the US, but only one number does not change our mind. So leaving that behind, moving to the next day, Canadian inflation reports came in. I mean, the number looks very tempting. We got a nice beat across the board, but but why there is a but? Because because the central bank is very uncertain about the relation, about the tensions going on between US and Canada. So if we could have got a negative numbers, I still wasn't looking to trade this data. We got a positive number, I know, but the CPI alone does not change anything, because we know that right now the BOC is highly focused on how the thing's gonna work out between US and Canada. And if the tariffs got implemented on April 2nd, then how are they gonna work with that? So we know from a broader point of view, from an eagle point of view, let's say with the eagle eye, let's just go back and look at the Canadian economy, that that if the tariffs get implemented, it's going to be very disastrous for Canada. A lot of jobs going to get lost, and the recession is likely. So this number was pretty good, but we know that the market is not really focusing on this data. It was the tariff and the April 2nd that's going to decide where the Canadian economy gonna go. So we just left it as it is. And BOG, we already talked about it. And FOMC again, employment change from Australia. Now, labor data, this is a forex factory, okay, calendar. It's a cheap and free calendar. So if you want to go for a better calendar, we have here trading economics. It's just a free refined TV. You can have a lot of data for free. Now let's just go to the labor data we had from Australia. So why I'm saying that this one is cheaper and this one is little better but free is that, look at this. We had unemployment change and unemployment rate, just two figures, but this is not the all of the data we got. We got full-time employment change and part-time employment change alongside with that data. So that's why I highly recommend that you should go for a better calendar, not just for the forex factory, but also if you get better the calendar, there are better calendars than this. Those are paid calendars, but you have to find those calendars. Anyway, we had these numbers, but these numbers are not that good. We had employment change coming out negative 52, and the majority of these negative 52.8 came from full-time employment change. We know that full-time employment is very very important for all of these numbers. Unemployment rate stays as where it is, 4.1%. So overall it was a negative side report, but not very highly convicting that we should jump in a trade and try to bank some bucks out of this event. So on Thursday, March 20th, we had labor data again coming from Great Britain, and let's just move here. So we had unemployment rate staying the same, consensus was 4.4, 4.4, and employment change, average earnings is just, it was like a perfect landing for this number. Claimant change was higher than prior, but it was okay. So I was not really convinced with this data too. Okay, now we talked about the BOE. Unemployment claims perfectly sitting in a healthy territory. If we just zoom out from this, we can see that this everything from 2022 until to 2025, the unemployment claims staying below 250, which is clearly a very healthy sign of a US economy. So the labor market is pretty much solid, and moving forward with the last data we had this Friday, means today is core retail sales and retail sales coming out from Canada. 0.2% was the actual numbers we got. Revisions got higher. Let's see, we have 2.7 to 2.9 and 2.5 to 2.6. But as I said, if I haven't paid attention to the inflation numbers, how come I can pay attention to these retail sales? I mean, These retail sales stands no chance against inflation numbers, but we know that the tariffs are the most important driving factor for Canadian dollar or Canadian economy. So focusing on these data stands no chance. So that was this week, and let's now talk about what we are having next week. So I'm pretty much happy for this week, the next week actually, just for Monday. And I will touch on that later why I'm saying that. Let's just start with the Monday Flash Manufacturing and Services PMIs. We're getting from Euro, from Britain, and from US side. And and the next thing, Tuesday, we're getting CPI reports from Australia and annual budget release. Very, very important from Great Britain side, because there's Chancellor Reeves gonna come out, and the major consensus is that she's not gonna change her view. She's not gonna change her budget, but any changes to her budget is going to be very significant for the England side. So we will look on that, what she has to say. We don't have the time right now, but we'll see what we get from Chancellor Reeves. On Thursday, March 27th, we're getting a final GDP quarter of quarter. Why it says final GDP? Because this is the last number. We get, I think there are three versions of this. First one is advanced, first one preliminary, and final. This is the least focused on number, so I'm not very excited about this number. Unemployment rate claims, any changes to that? I think if I really wanna trading this event, I wanna see going above 250. Staying beneath 250 is like nothing but good to me. Retail sales, I'm not very excited about this. Nothing. Let's just skip it. GDP month on month, we will see. Again, from a Canadian side, we are majorly focused on the on the tariff side rather than focusing on these economic numbers. So from overall from this week, next week, that's why I said I'm very excited. Very excited just for Monday, because we're gonna get something to work with, that is the Flash Manufacturing and Services PMIs. So that is the video for next week. I hope that this video has really helped you in some way. And if you have any questions, don't hesitate to let me know.